Financial Accounting, FRK311, Assessment 1, Feedback on questions number 10, 11 and 12. Now as you can see there, question 10 gave you some information again. It gave you the profit before tax, there you've got that figure, but it also gave you an unused tax loss at the end of the year due to various reasons. Now, you had to go and calculate which journal entry was applicable. And then we give you the temporary differences per se. Now your calculation will then look like this. You'll calculate firstly machinery as it was given to you, the deferred tax at the end of June 2016. So your deferred tax at that stage, the balance was 11,200. being the 28% on the 40,000 temporary differences. Then for 2017 you go and do exactly the same. And you calculate what are the temporary differences. The 120 given minus the 60 tax base, that gives me a temporary difference of 60,000. 28% on that gives me the 16,800 being our deferred tax balance, relating to, in this case, the machinery. Now, because you have an unused tax loss, that tax loss will actually will have to be a debit deferred tax entry. So we calculate the tax loss as 24,000, which was given to you in the question. Your tax on that 24,000 was the 6,720 figure there. Now the difference between that is 16 and the 10. Now you will see that 10,080 is still a credit balance. So therefore it is allowable. In this case, doesn't matter if we have future profits or not. The credit, there's still a credit balance. So we will absorb the full unused tax loss into our deferred tax calculation. So therefore, our movement is only the difference between the 11,200 and the 10,080, which is 1,120 debit. Remember, that was a credit balance. We want to move from a credit balance to a smaller credit balance, and that is why the 120 is a debit. So if we go and look at our question, the question stated, which of the following? If you did your calculations correctly, you didn't even have to wonder. It will be debit the deferred tax and credit the income tax expense account. And there's your answer. Now for question number 11, you were given the following information. Again, there's a tax loss of 22,000 before tax, and then after you've calculated your temporary differences, there's an unused tax loss of 76,000. And then you were given the various temporary differences on the machines. So let's go and look at that one there. On question number 11, there's your calculation. Firstly, you go to 2017 and you get a deferred tax balance of 14,000. Then you get to 2018 and your deferred tax is 16,800. Now in this case, that is your credit balance at the end of 30 June 2018. Now your unused tax loss is 76,000. And the question stated clearly that this company is making losses. They are still a going concern, but they do not foresee that they will make profits in the foreseeable future. And for that reason, we are not allowed to create a debit deferred tax. So in other words, this balance there must either be credit or zero. So that is why we limit that debit due to the unused tax losses to 16,800. If you look at this column there, that limit is 16,000, 76,000 debit, 60,000 credit, so we have to limit that 16,000. And now let's go to question 12 first. That 16,000 means that our movement or our calculation of those amounts was the 4,480, which is the unused 16,000. And if you remember correctly, that was the amount that we wanted you to calculate on these two amounts. The tax effect of the unrecognized portion of the current year is the 4,480. There were no unutilized amounts the previous year. That wasn't there. So it's just the current year, which you have the 4,480, which will be in number B, and you will have the 0 in number C. Now we can go back to question number 11. Now question in number 11, the question was asked, what is that amount at the standard rate? Now many students made the big mistake here and they said 0. It cannot be 0. Remember, this is your tax reconciliation account, or not account rather, tax reconciliation that you are doing. So you have to reconcile what is the accounting loss, which in this case was the 22,000. What is the tax effect on that accounting loss? That will be 6,160, being 22,000 times 28%. That is why D is then the answer. Remember, this is a tax recon. It's not an accounting calculation. It's just a tax reconciliation, and therefore you are reconciling what is your accounting situation to end up with what tax is paid or payable in this current year. So for that reason, you calculated number D, 6,600. Right, 6,160. Sorry, thank you.